Picture this, a Bitcoin valued at a staggering $1.5 million by the year 2030. That's what Cathy Wood predicted on January 11th on CNBC, just hours after the approval of spot Bitcoin ETFs in the US. We believe the likelihood of our prediction has significantly increased with this SEC approval. This is the green light we were waiting for. According to Cathy, the significant increase in global hash rate, the amount of illiquid Bitcoin, and the growth in active users on the network indicate that the technology is closely following the path of other disruptive technologies. She believes that the value of Bitcoin is set to skyrocket in the coming years. For your information, even though it's a complex metric to determine, it's estimated that there are as many Bitcoin users today as there were internet users just before the year 2000. So, a Bitcoin valued at over $1 million before the next decade, absurd or possible? Stick with us until the end of this video. The GA Crypto team and I have prepared yet another information-packed video. You'll get to know who Cathy Wood is and why her prediction might not be as far-fetched as it seems. If you haven't already, take action and subscribe to our channel so that you won't miss out on new information that will get you an insider's view on the changes in the crypto arena. Now, let's get into the nitty-gritty. Cathy Wood was born on November 26, 1955 in LA, into a family of Irish immigrants. Raised by a military father, she was brought up with a religious education and completed her high school in 1974. 3 years later, she graduated with a degree in economics and finance from the University of South California, HSC, earning a special distinction awarded to the top 1% of graduates. After completing her studies, Cathy began her career in finance at Capital Group, which is none other than one of the world's 3 largest pension funds. She stayed there for 3 years before moving in 1980 to start her New York adventure at Jennison Associates, a Wall Street investment fund managing over $175 billion. She spent 18 years there. Then she took her career to the next level by joining AllianceBernstein, another investment fund, but this time managing almost $800 billion. There, she became the Chief Investment Officer, or CIO. It was at this point that Cathy Wood's unique style began to develop and get noticed on Wall Street. She's a risk taker, favoring high returns despite the associated risks. For her, the most important thing is the expected return. In simple terms, if you have a 1 in 10 chance of being right, but if you are right, you make 50 times your bet, it's worth it from an expected gains perspective. This approach earned her numerous criticisms during the financial crisis of 2008, as the funds under her responsibility recorded performances even worse than benchmarked. But Cathy persisted and maintained her stance. She was convinced that her strategy was the best in the long term. Unfortunately, Peter Krause, the president and CEO of AllianceBernstein at the time, didn't see things exactly the same way. Cathy Wood left the fund in 2013, and a few months later, she founded ARK Invest. This time, she was at the helm, finally free to implement her own investment strategies. ARK Invest defines itself as radically different from what investors might find in the market. We invest exclusively in disruptive innovations. That's their mantra. Unlike other investment funds that generally focus on analyzing the past to identify companies with short and medium-term return prospects, ARK looks to the future, searching for what could be the next big thing. This reminds me of the latest video by Charles Gave on his channel, L'Institut de Liberté, where he explains 2 sources of economic growth. Those videos, though, are in French, so if you want to get back into high school French for those who took it, you can go check it out. On the other hand, there's what we call Ricardian growth. This is based on the law of comparative advantage. Essentially, it's about optimizing processes and the market through specialization. For example, if one country is more efficient or skilled in producing a certain good or service compared to another, then it should focus on that sector. Gradually, you'll end up with car factories in Germany and tourist hotels in Spain, for example. This is an oversimplification, but you get the general idea. So that's Ricardian growth, an increase in productivity through specialization and marginal optimization of processes. On the other hand, you have Schumpeterian growth, based on the works of Joseph Schumpeter. Here, everything rests on innovation and entrepreneurship. The economic phenomenon this economist explained is kind of simple. As the world evolves, inventions and innovations emerge that challenge everything. This is where Joseph's creative destruction dismantles entire sectors of the economy to let new businesses emerge. This is how we view Schumpeterian growth. The advent of the automobile, for example, radically transformed the entire horse and carriage sector within just a few decades, leading to a near total disappearance of businesses associated with that old technology. And that's exactly where Cathy Wood places her bets. She's all in on Schumpeter. ARK Invest's investment thesis is straightforward. Identify disruptive innovations and the companies that utilize them the most efficiently. According to ARK Invest, for an innovation to be considered disruptive, it must accomplish 3 things. 1. Drastically reduce costs. 2. Be transsectorial. And 3. Act as a foundational layer for the emergence of new innovations. In other words, a disruptive innovation must deeply change our ways of living and working. ARK Invest, for example, is particularly interested in technologies related to human genome sequencing, energy storage, robotics, artificial intelligence, 3D printing, space exploration, and last but not least, blockchain and fintech. Therefore, ARK does focus on Apple, Meta, Amazon, Google, or Microsoft, but rather on companies like Tesla, Zoom, Robinhood, Coinbase, and Roblox. It's not that big tech giants aren't actively involved in what ARK Invest defines as disruptive innovations. It's just that they believe the potential for returns is no longer sufficient. Although these companies have proven themselves up to now, ARK Invest holds the view that there are limits to their growth. Therefore, it's necessary to seek returns elsewhere in companies that haven't yet experienced their growth explosion. As mentioned earlier, Cathy Wood's investment strategy is unique and has already drawn criticism. However, during bull market phases, her approach vastly outperforms the more traditional strategies adopted by other players in the field. One of the bets that solidified Cathy Wood's reputation and accounts for her exceptional performance in recent years was her early investment in Tesla. In 2016, she invested in Tesla when the stock was at $15, at the time when almost no one else was talking about it. Today, that stock is worth nearly $200. If you had trusted her since the creation of her investment fund in 2014 and put $10,000 into her 3 flagship ETFs at the peak of the last bull run, your $30,000 would have been worth about $250K, representing an 830% performance increase. On the flip side, ARK Invest's approach is especially vulnerable during market downturns. Since the peak of the bubble in February 2021, there has been a cumulative drop of 65% for these ETFs. But as we've often repeated in our videos, volatility is a price you pay for performance. You can't expect to make big gains without a bit of a shakeup. It'd be far too easy otherwise. Basically, I think you're beginning to understand the kind of person Cathy Wood is. She has strong convictions, is obsessed with new technologies and their applications, and focuses on the long term without being swayed by the extreme volatility of stock prices she holds. Cathy has the perfect profile to be a Bitcoin hodler. When you dig a little to understand the relationship between Cathy Wood and ARK Invest with Bitcoin, it becomes quite clear that this is a topic that has interested them for many years. The first research article they published on their website about Bitcoin dates back to 2015. The paper discusses the security of the network by miners and the challenges specific to this issue. Reading it, it's apparent that their understanding of mining and the network's functioning is excellent. They emphasize the importance of a geographic decentralization of miners to maintain the network's resilience, and also address the issue of transaction fees, which are expected to replace block subsidies eventually. They express critical views on this topic and even propose a solution, a sort of a Bitcoin improvement proposal, base fees of 1.2% on all transactions to sufficiently incentivize miners to secure the network. They published another article in 2017 to discuss the unique nature of Bitcoin as a financial asset. Based on their estimations, it's absolutely necessary to define an entirely new framework to comprehend the Bitcoin asset and to enable the implementation of regulations specific to this unique entity. We believe that technical jargon, bad actors, price, volatility, and sensational media have kept much of the masses away from what could be the biggest technological development since the internet. In total, on their website, you can find no less than 20 monthly reports, 19 blog articles, 17 episodes of their podcast, 7 white papers, and 6 episodes of their public brainstorming sessions, all dedicated to Bitcoin, its technology, development prospects, as well as its ecosystem and community. So it's clear that ARK Invest has been closely following Bitcoin for many years, not only as an asset, but also, and more importantly, for the financial technological innovation that it represents. In 2020, they published 2 new research papers that delve even deeper into the subject. ARK Invest elaborates on how Bitcoin's technical features make its emergence in a trust-based financial world evident. According to them, the fragility of the current financial system stems from a model reliant solely on centralized institutions, namely central banks, commercial banks, and payment processors. Human biases and errors expose participants to mismanagement, creating an unpredictable environment for economic activity. In this trust-based model, the integrity of an institution depends on those who control it. Top-down imposed rules are guaranteed only if those in charge are trustworthy. The decision-making process is at the discretion of those in power, sometimes creating a misalignment of incentives between the institution and its participants. As institutions grow in importance, the entities controlling them accumulate more power, potentially exposing participants to harmful behaviors. All power tends to corrupt, and absolute power corrupts absolutely. Based on the outlook of ARK Invest, Bitcoin has the potential to completely transform the way a financial system distributes trust, eliminating the roles of several institutions that rely on centralized authorities, and thus creating an ecosystem based on computing and cryptography. In their paper, ARK Invest also discusses the fact that Bitcoin enables individuals to regain control over their wealth. This feature is not only useful, but can be essential in jurisdictions where property rights are not recognized or enforced. Based on their predictions, Bitcoin is the most robust asset on the spectrum of asset protection, surpassing cash, real estate, and even gold. I'd like to note that we truly understand the power of these new technologies when we take possession of them, eliminating intermediaries and minimizing counterparty risks. Mt. Gox, Bitcoinica, BlockFi, Celsius, FTX, history repeats itself, cycle after cycle. As we explained earlier, ARK Invest's mission is to select disruptive technologies that will change our way of life. And for them, Bitcoin fits this description perfectly. Unlike some Wall Street players who view Bitcoin primarily as a highly volatile, speculative object, ARK Invest has been interested in it for several years because they see it as a truly revolutionary technology. Satoshi Nakamoto's invention allows for a significant cost reduction and presents applications that transcend sectors and serve as a foundation for other innovations. In a podcast, Cathie explains what first attracted her to Bitcoin was its open source code development. She points out that a technology that develops in this organic manner has a higher success rate and a faster development pace than technology developed in closed source. In a captivating interview with CNBC, after the much anticipated ETF approvals, Cathy Wood made a bold statement. Bitcoin is a public good. It's essentially layer 0 of the internet. Imagine being bullish on Bitcoin. Now meet Cathy Wood, the Wall Street maximalist who takes bullish to another level. You heard that right. Remember our opening talk? She's forecasting Bitcoin to soar above $1 million by 2030. Cathy believes Bitcoin is one of the most game-changing investments we'll see in our lifetime.